All right, happy Wednesday, everybody. Now let's check out the charts for Bitcoin today. So our bias was that we were on the daily going to be a positive for Tuesday, and we did find that we did come up towards that shorting point of interest, and we definitely came up. We tested that 618 retracement as the price came from the positive impulse. It's come down and retested the 618 line as resistance. So as it's come up into this point of interest, it has rejected twice as of this point. So we're now in the 2 o'clock Brisbane time candle, and it does look like we are moving down lower. As we can kind of see here, we've got as prices are moving up. Let's put this in a better light. As we can see, prices are moving up. We've also got a divergence in the SMIO, which always leads to an interesting perspective. We've got minor case of highs and lows across the top here. So we do have the perspective of actually breaking down through these 2 points. That is my anticipation, because as we can also see, we've got a divergence as the 5 and the 34 simple moving averages are starting to converge. So with the Awesome Oscillator, it's defining that the 5 period moving average is higher than the 34 moving average and is actually starting to come in. So that's what this is showing us here on this histogram. Also on the SMIO, we are forming lower highs, and we are also just crossed over the zero line. We're only 20 minutes into this candle, so we can't confirm this current point, but we are looking at a crossover in the zero line on the SMIO, which is very interesting. So this is really showing us that we could potentially be, this could be the exhaustion of the bounce, which could either lead us to just bouncing up and down, ebb and flowing in this little area, in this zone, or we could actually be falling back down to retest these lows down near the 60,000 to 58,000, which is my ultimate perspective at this point. Alright, so if we're to now we finally have a few areas of interest that we can actually draw up. Let's put in some liquidity zones. So here prices come down, rejected and pushed away, which is definitely a point. So that's a liquidity grab area. So we want to look at how price comes and relates to that space. If it grabs and pushes back up to the upside, that shows a lot of support there. It means there's more buying pressure than we can actually anticipate in that space. Alright, let's go another one. So we can see another here. Interestingly, to note that these are all actually quite close together. And here's another one. So we really rejected off those lows. And now here we are forming a lot of support. There's a lot of pressure as far as liquidity pressure is here, which really brings price. It's a real attractive. It's quite magnetic in its form, that it pulls price to it because it wants to mitigate. The whole market wants to balance, so there's an equal number of buyers and sellers. And when there's more buyers, it moves in a direction. When there's more sellers, it moves in another direction. So what we're looking at here is we've really come up. Well, let's change that to a trend line. Here we've come up to the 618. We've actually mitigated this high. We've come up, we've wicked above just finally, but that's all we need. Oh. This one that we want. So this one has mitigated, taken the liquidity grab, and is now starting to move further down. We are looking at this as a price level of support resistance, where we've got wicks that have come up and touched and rejected. Here we've got wicks that have come up, not quite made it, rejected, not quite made it, rejected, broke through, really tested, mitigated a lot of orders through there. So through this space, there is a lot of, through this range, there really is a lot of, there's been selling pressure, buying pressure, buying pressure. So there's a whole dose of mitigations. So even when it came down to the through here, you know, it came up, there was selling pressure, selling pressure, selling pressure. There's been enough buying pressure that's been put in these lower lows. Oh, let me start again. There's been enough buying pressure in these lower highs. So we've got 3 lower highs that have come up that's managed to break it through. However, this was the point of interest that we were looking at yesterday to go short. And now we seem to have bounced off it, and we're going to retest this zone once again, because this seems like a real mitigation area. And with these liquidity grabs, with people with their stop orders just below these wicks, that's definitely something that I'm looking. My anticipation is that we are going to be moving down to mitigate these. That is my belief. But I'm also looking at the perspective that we could come down and come back up to retest. Come back up to retest this wick high. I do believe that, I think that this line in the sand is where will be the perspective break of structure, where if we break up here, everyone will be like, bang on, we're going to the moon, we are going to break the $73,000 mark again. Maybe we will, maybe we won't, but what we are doing is we're looking at with a recent indicative price, and we're looking at where these liquidity levels are, where these liquidity zones are showing, and how the moving averages are relating to that within that space. So also bearing in mind on the 1 hourly, we have that divergence. We've got divergence, so we've got divergence in the awesome oscillator, the SMIO, and price, which is tending me to the downside. So let's just have a quick look at the Wednesday bias. So let's punch that out, and we'll see how things go. So a Wednesday bias, let's just lay it all out on. Alright, so Tuesday was an inside bullish candle. Rejected off 0.618 support. Now, one thing to note for myself around these sorts of times is the 618 zone and the 786 zone are self-fulfilling prophecies. You know, they are put there because that's what people use, because we all need something to relate to. Is this a fundamental thing that we see in the markets all the time? Yes. Is it because that is the innate nature of markets? Maybe. Or is it something that because we all want to see it, that's the points that we're looking at? I'm leaning towards that, but you know what? Whether it's magic, whether it's a self-fulfilling prophecy, or whether it's just the way the markets are, it doesn't matter. All we have to do is notice it, acknowledge it for the piece of the puzzle, and just include it as we can. Alright, let's moving on to the awesome oscillator. We can see that we are still negative, bearish, and steady. And the SMIO is, we've got negative, strong, and bullish. So we do have ourselves a little bit of deviation once again. So we've got deviation of SMIO and AO. Once again, we've also talked about the SMIO is although it seems to be a leading indicator, it also shows that we can't respond to it instantly. You know, we need additional evidence, we need more confluence of information before we can take it. We can't just shoot from the hip, otherwise there's a lot of false flags, there's lots of false alerts. So you know, we can also see that we do have lower highs, lower lows, while the market is showing lower lows. We've got lower lows here. So basically it's a little bit of an impulse up. We still can't include the Wednesday candle, because once again we're 4.5 hours in, so it's not a real there's not enough information within that histogram bar for us actually to make genuine decisions. But we are looking at the Tuesday bar, how that histogram bar closed, and that is bullish. So that is good to see. So we've got a bit of deviation going between our SMIO and AO, which is a good leading information. Not something that we need to make instant changes to, but something to acknowledge. So looking to infer to be at resistance and moving to sweep liquidity below 60,000. So that is my bias for today. So we're looking at coming up, we've met this resistance at the purple point of interest zone that we talked about yesterday on Tuesday. We've come up, we've now formed some liquidity levels, which we didn't have yesterday when we were down here. There wasn't anything of value to sort of really acknowledge that there is a liquidity support or areas that we could come and grab above this area, but there's a few here, which leaves this as a little bit of a not quite an imbalance, but it's definitely an area of weakness that we could potentially come and just fall straight through. But let's just wait and see how structure forms moving to the right of the screen, and as we either start to move up or move down. So I hope everyone gets enough information out of that. Thanks very much for watching, and we'll see you tomorrow. Cheers.